Assalamu alaikum students, this is me Abdullah Ghauri from HPGS group of schools. Students, today the topic for our revision is partnership accounts. First, know about the syllabus content of 7707 relating to the partnership accounts. The examiner wants to explain the advantages and disadvantages of forming a partnership, outline the importance and contents of a partnership agreement, explain the purpose of an appropriation account, prepare income statement, appropriation accounts and statements of financial position, record interest on partners' loans, interest on capital, interest on drawings, partner salaries and the division of the balance of profit or loss, make adjustments to financial statements, explain the uses of and difference between the capital and current accounts, draw up partners' capitals and current account in the ledger account form and as part of a statement of financial position. So friends, these are the contents of partnership accounting in your syllabus of O levels 7707. Now listen carefully about the contents of partnerships. Next, the partnership agreement. Partnership is actually evolved or originated in 1932 and revised in 2007 with an additional option of limited partnership. Partnership agreements states that the terms under which the partnership operates are set out in the partnership agreement. Partnership can be defined as a relationship which exists between two persons till 20 persons carrying on a business in common with a view of profit. Note it down that in partnership agreement, only 2 to 20% are allowed to form a partnership firm. For more than 20%, you need to operate as a private limited company. It won't be executed as partnership firm. Now friends, next. Contents of partnership deeds means the agreement between the partners on certain terms and conditions. We know that before forming a partnership agreement, we have to decide some important terms and conditions. These terms and conditions are drafted on a draft known as partnership deed. The partnership deed must contain the name of the firm. Number 2, the name and detail of all partners, limited partners, journal partners, nominal partners and sleeping partners. You must have to categorize among the partners category. That is what limited partners means. The partner's liability is limited in a business. Suppose that if company makes a loss of $100 for each partner, then partner is responsible for their share invested in a company, not more than the share invested in a company. This is what the limited partner. Journal partner means the partner is providing his capital as well as his skills to manage the business. Nominal partner means that the business will only use the name of the partners and their goodwill to perform a business in partnership firm. While sleeping partner means that partner is providing only a financial capital to the business, not more than this. This is what the sleeping partner. The third point, date of commencement of business and its duration. The partnership agreement must be include this term, that for how long period you are contributing your capital for the partnership firms, for how long period you would like to operate your partnership business. The date must be mentioned with a duration for 3 years, for 7 years, for 10 years or for multiple years, anyone you want. And the next point is capital contributed by each partner, CCR, capital contribution ratio. Capital contribution ratio is the main source of partnership agreement. It tells you that how much amount by each partner is invested in a partnership firm. The third one is profit loss sharing ratio. The profit sharing ratio means the partner must be divide their shares according to the ratio decided by the partners. The next point is the interest on capital payable to the partners. We know that partner must have to be paid interest to motivate the investment of the partners or to motivate the partners towards business. Why? Because before forming a partnership, a partner have a many choice to invest in a market. But he will prefer your business being a partner. That's why? Because he is actually getting two things over there. Number one, the profit made by the company. Number two, the interest on capital that is decided by the partnership agreement. The next point is the extent of borrowing by each partner can draw, and its interest means what? A partners may withdraw the amount of the money from the business, and for that concern he must have to pay the interest. This should be decided before making partnership. The next one is salary payable to the partners. The procedure of admission or retirement and the death of the partner. The method used for calculating goodwill, preparation of accounts of the firm under dissolution of partnerships. So these are the important contents that you must have to decide before going in a partnership business. Friend, suppose if you forget to decide some terms and condition before making a partnership agreement, then you will follow the following instructions. These instructions are what? The partners will share profit and losses equally. If they forget to decide the ratio of the profit and losses, then the partner will share profit and losses equally. Suppose if there are 4 partners, then each partner will receive 25% of shares. If there are 2 partners, then each partner will receive 50% of shares. Interest on capital will not be payable. If it was not decided before making the partnership agreement, then interest will not be payable. Partners will not get a salary. Drawings will not be chargeable with interest if it was not decided before making the partnership. But partner will get 6% per annum interest on loan to the firm if they mutually agree. Friends, we know that a loan from the partner is always treated as a liability, as a long-term liability for the partnership. An interest paid on a loan to the partner by the business is always considered as a finance cost and will become a part of profit and loss account instead of appropriation account. Partnership versus sole trader. We know that there are many benefits in a partnership as compared to sole trader, and there are many disadvantages too of partnership versus sole trader. First, discuss the differences regarding accounting in partnership as compared to sole trader. Student, we know that in sole trader there are 2 types, or there are 2 parts, not types. There are 2 parts. There are 2 parts of income statement, in which one we draw trading account, and in second we draw profit and loss account. So these are 2 segments of income statement in sole trader. In first trading account you calculate gross profit, while in second part profit and loss account you calculate net profit, and that net profit will be added into the capital of the sole trader. But in partnership accounts, there are 3 parts or 3 segments of income statement. In first segment, in trading account, you will calculate gross profit. The second segment is profit and loss account, and in that part you will calculate net profit. And in third segment, appropriation account, you will calculate distributable profit. Okay, know the difference between the expenses and revenue recorded in appropriation account and profit and loss account. We know that in profit and loss account, all expenses relating to the operating expenses or all expenses relating to the operation of the business are recorded, while all revenue earned by the business except their core sale is recorded in profit and loss account. While in appropriation account, all expenses relating to the partners or the owner of the business would be recorded, and all revenue relating to the partners or owner of the business will be recorded in appropriation account. While in trading account, we calculate or we record expenses and revenue purely relating to the trading of the business. Suppose if you are running a cosmetic industry, then the cosmetic sale will recorded into this trading account, and the purchases expenses relating to the cosmetic product, the particular product which you are selling in the market, will be recorded into the trading account. And suppose that you got a 2 extra room in your premises, and that 2 extra room will rented out by your organization. The rental income would be considered as the other income of the company and would be recorded into the profit and loss account after gross profit. Okay students, this was the big difference relating to the accountancy. While we know that there is a natural difference between the partnership and sole trader. Yes, partnership and sole trader. In partnership, more finance is available as compared to sole trader. In partnership, more directives, more directions, more specialty is available in the shape of ownership or the partners. While in sole trader, only one owner is regulating or operating a business. So all commands and all peculiarities belongs to only a single owner. The single owner is a manager, or the single owner is a operator of the sole trader. While there are different persons engaging in a partnership are the operators of the partnership firm. So they must got some different peculiarities. Suppose that a partners belongs to a chartered accountant industry, while the second partner belongs to the marketing industry, while the third partner belongs to the manufacturing industry. So these 3 partners will bring different capabilities from their corners in a business, and the business will definitely lead in a market just because of their specialty, just because of their advisory. Friends, partnership versus limited liability company. In partnership, we know that all partners are liable for each losses and profit like sole trader. While in limited company, the court matters are not handled by the owner or the shareholders. But in partnership firm, all court matters will be handed over by the partners or the owner of the company. And there are many differences in partnership and limited liability company, which we have discussed in class in detail. There is a time for a quick revision, so that's why I'm excluding more differences between partners versus sole trader and partnership versus limited liability company. Our next slide is regarding the capital account. We know that in partnership there are 2 types of capital account, while in sole trader there is only one capital account. The two types of the capital account in partnership, one name is what the capital account. This capital account is actually formed for the initial investment made by each partner. Capital account is opened for the initial investment contribution, and these are the recorded in a series of capital accounts, and interest is always paid on capital account. So two things must be remembered regarding the capital account. Number one, capital account is kept for initial investment, and number two, interest is always paid on the amount of the capital account, not on the current account. Okay? The second capital of a partner is known as current account. Current account is also a part of capital account. It shows the changes in capital by earning profit or other intermediaries. Current account is used to record the profits retained in a business by the partner or changes in capital account so that agreement should not be affected. We know that capital contribution ratio is a main part of partnership agreement. That's why we keep another part of capital account known as current account to record the changes in capital. Now, loans by partner. We know that loans by partners is always treated as a long-term liability, and interest is paid on a long-term liability will be treated as an operating expense or finance cost in profit and loss account. It won't become the part of appropriation account, the third part of income statement of partnership. Appropriation of net profit. This is what the third part of the income statement in partnership. The first part is trading account, the second part profit and loss account, and the third part is what? Appropriation account. The appropriation account is actually maintained to know the distributable profit or losses by the partners. It starts after net profit or operating profit and ends with the distributable profit. And that particular distributable profit, which will be calculated under appropriation account, will be distributed among each partner by profit and loss sharing ratio. So their profit or the profit of the partners will be credited to the current account. Yes, friend, the last segment of our partnership revision is about the goodwill. This is what the theoretical revision. Goodwill, we know that the reputation of the business is known as goodwill. The goodwill can be calculated by a particular formula. This is what the value of the business minus net assets value. The value of the business minus net assets value. This is a formula for goodwill. And we know that goodwill is always distributed among each partner according to profit and loss sharing ratio. If partner decides that goodwill won't be treated in the accounts, so the share of the goodwill will be bared by each partner. Means each partner will fulfill the loss of their part calculated by profit and loss sharing ratio for goodwill. Okay, the goodwill intangible asset. We know that goodwill is what? The intangible asset. Intangible asset are those assets which cannot be touched, seen, or have a physical existence. This is what the internal generated assets which shows the reputation of the business, and goodwill may be depreciate or appreciate. All intangible assets depreciation is known as amortization. Well, amortization is not a topic over here. We are just reviewing the topic goodwill. The value of the reputation of a business is known as goodwill. When a partner retires or a new partner is admitted, it is usual to calculate the goodwill in the business. Goodwill is equal to value of business minus net assets. Goodwill is distributed and eliminated according to the profit and loss sharing ratio under partnership. So student, this was our topic of partnership, and we have revised all theory relating to your syllabus 7707. If you have any query, then please do inbox me regarding any topics relating to the partnership accounts. We will solve additional queries and past paper questions in our next lecture. So please keep logging or keep watching that particular YouTube channel or this subscribe channel of HPGS. Thank you so much.